Welcome to TradeTheNBI.com. This is John. This report is for Friday the 13th, May 13th. Well, I had projected around 38.50 for when institutions and I would start to get interested once particularly we broke below 4K. It was sort of a given, and sure enough, I missed it by 5 because we went to 38.55, and then the buy program started kicking in, and you can see the continuation of that. Of course, the crossover of Magenta continuing from the other day on that partial pullback up, and it's just increasing, and of course the drop in DOC Orange. We will need to see a turnaround of midterm buyers and long-term buyers to suspect that it's going to do anything more than just come to the 23% and get rejected. So we'll keep an eye out for that one. No real reset from a DOC steel standpoint. And the reality is you got quite a strong short presence here with the cyan at these levels. So there could be plenty of powder for a pretty decent move if they're able to continue it. Going through. From an NQ standpoint, literally identical, a little bit stronger DOC readings in general. And it's something to pay attention to when it comes to these extremes. When we saw the dip below the red line, we knew that the 50% was likely not to be able to hold anything. Then when we got to the 0% and represented with higher extreme, then we're looking for the P2 pivot where you get a higher red pivot going forward. That didn't really make a strong materialization because we really didn't get the strong dip of orange below. And once we did do it, we immediately inverted, and that led to that rapid sell-off that brought us right to the expected ranges. It's not good for the Eurozone. It's only getting worse. They keep deciding to do things that just make things more problematic. But as energy costs grow, the exponential slowdown in the EU economy could be catastrophic, particularly if the Ukrainians decided to cut off one pipeline. If they cut off a secondary one for some reason, it would be devastating to the euro. I mean, you could see, another 10, 15 cents cut off. And you figure just a couple of months ago, it was at 125, and now we're getting close to, they're going to have to try and hold the parity if we get to 0, which would be major capital flight has already been undertaken, because that's how you get to this kind of situation. I just don't see U.S. central bank stepping in at all to try to stabilize much more. They already did it at the 105 level and couldn't hold that. The next defense is probably going to be somewhere above 101 and a half, 102, but it's problematic for it. The U.S. really being in its tightening mode isn't looking for that. And now you're starting to represent what we were talking about with some of this, where everyone was always expecting gold to rise, but you had that prospect of, with the slowing of the GDP-1 numbers being as dramatic as they were, it sets up a deflationary pressure, which is something that obviously the Fed has wanted. I mentioned months ago that their goal was to increase volatility in the market. The added fuel costs, all these things were draining the excess liquidity that existed in the market, and then the tightening credit with independent interest rates rising. You've had this massive squeeze. Now their idea is that they hope it will be a soft landing, but even today they came out and said, well, we really don't know exactly where it ends, but we all know it ends with a recession based on what we've seen from the past, with inversion curves from bonds to stocks. So this is sort of a representation from a gold standpoint that while inflation is running hot, what it'll do is it'll come to a quick end as people aren't buying the things that, or secondarily, which is another issue, is the supply chain issues, where even if you have the money and there's nothing to buy, it sort of has a similar effect. So you've got these multiple prongs really trying to reduce the liquidity. The best ones, of course, are a declining market, as well as higher fuel costs, higher food costs, higher all costs, because it just sucks up excess reserves in a punitive way, but it does do what it needs to do in that case. Because this is problematic with oil maintaining these levels for no real justifiable reason other than just the policies that have been adopted. That's the only reason we've seen any of this increase at all anyway. So you can see the artificial hand of manipulation in that. Some people may say, well, it's not conscious, but it's like you can't just arbitrarily reduce what you had as domestic dominance for oil production, and that suddenly just reduce it, and then also see that you're going to restrict all the other worldwide supply from Russia. Yeah, so anyone who tells you it was accidental or inconsequential is just not even in the real world. And you can see here's the flight to treasuries. That's that rise we expected coming off the big dip. People seeking safety in the security of treasuries. And it may not be a bad play either, because if that inflation is able to be squeezed out by those setups, they won't be as far underwater as they already are. I mean, even buying treasuries at this point is a losing gambit given where inflation is running. So the hemorrhage from the 40K short range, we actually 39.6 range up there from that short, reached the same capitulation as the market and the same rebound within the market. So you're getting some correlation, pretty strong actually, between Bitcoin, NASDAQ, and even Ethereum. So not surprising there. And that's just mostly because, again, they're traded in futures contracts. And once that happens, just like gold, it stops being about the actual thing and about the derivative, meaning the future contract. This we see played out in so many different arenas, and this is why you have so many other cryptos that are having so many different issues. All the ones that were tethered to dollars and that, but not actual reserve dollars, are in crisis mode. The ones that actually have the assets backing it up have done much better as far as holding on. But again, also that crypto carnage also brings a lot of fake excess wealth, and the squeeze, again, it becomes a credit squeeze, which is very effective at reining things in and really tightening stuff up fast. So, but the ETH buy signal, pretty clean, a little bunch of ABC moves, up, retrace, retrace, all of that was pretty clean and consistent. I've liked the way that ETH is traded from a crypto standpoint, given the indicators. 50K turnaround came here with that strong pushback up, the magenta over yellow and above white all at the same time. And then also you check out build up crossover well above the negative 13 range, and DOC orange dipping below with the green crossing over red, as well as red rising. So those were all positives. Gave you a couple of bars to get clear before takeoff, and that's where we're at now. Literally just brought yourself back up to the middle range from a couple of days ago. They'll be searching to get back up to this 4037 range. Anything to get back over that 4K, because it's a psychological thing, just for headlines, and that will help in their mind bring back some retail, because a lot of retail had to. They think that retail will come back. I don't know that it necessarily will, given the strain on regular budgets and stuff for living. May not have that excess to play with, and certainly with the tighter credit markets, the borrowing aspect of that's facilitated a lot of the trading that we've seen over the last couple of years is probably going to get reined into more normal areas. From a 5K standpoint, very clear. Every time we had these spikes of the white, clearly over, and then you have a magenta pivot, it's just a free signal to jump on it. Even when this one came here and then the pivot happened, you ended up with a little bit of a spike, but again, it still reverted right back to the same, back to the 0% level. And that's just a cycle that keeps repeating. And then what we started to get was a bit of that building once we got down a little bit lower in the day. It still wasn't the bottom at that particular stage, but we were starting to see a lot more buy configurations that were happening all under positive extremes, as you can see down here. So that just meant all of these different levels were going to be subject to retraces and fillbacks. And then a little bit later on, we get this beautiful DOC spread all at the same time, and that's what finally gave way to that complete capitulation all the way down to the 38.55 range here, and that was enough to create some basing, and that kicked in the big boys, and they did their little spurts, settled, and a couple more spurts, and then boom, you got enough to force some short covering, particularly into the pre-market. So I think that should even create another boost when the market opens to give another opportunity for players not to be squeezed out and stuff. So particularly on a weekly option expiration event. So all good stuff. This volatility range is just fantastic, and our readings have been performing beautifully with it. So we'll keep up with it. I will update you with anything relevant on the Skype chat. Trade well.